and welcome to ET Markets Crypto TV presented by CoinSwitch Kuber. This is our new show where we want to give you more information about cryptocurrencies. We want to demystify cryptocurrency for you. So stay on with us. My name is Miloni Bhatt. Now we all invest our money, right? We all want our money to grow. So what do? We put it into FDs, we buy property, we invest it in gold. And the idea really is that we want our money to work as hard for us as we do to earn it. But very often our investments are really based on little knowledge or maybe knowledge that we've got in passing, maybe a friendly tip that a friend has given us. Hey, that stock looks good. Do you want to invest in it? A YouTube video that we may have got. But now there is a whole new asset class on the block, and those are cryptocurrencies. Now, whatever foolproof methods may have worked for you in the past, investing in cryptocurrencies is different. We need to be armed with knowledge and we need to be safe. We need to ensure that our investments are safe and that they continue to grow. And we have just the show for you today, how to safely invest in cryptocurrencies. So we have a very interesting guest here today with us, someone who looks at cryptocurrencies very, very closely. We have with us Varun Sethi, who is a tech lawyer, and he is the founder of Blockchain Lawyer. Varun Sethi, thank you very much for joining us.
Thank you for having me.
Well, Varun, my first question to you is that what is the qualifier for someone to invest in cryptocurrencies in India today?
Well, cryptocurrencies today are an unregulated digital assets. However, there's a Supreme Court judgment dated March 4th, 2020. Thereby, any person who is eligible to enter into an Indian contract, which means a person above the age of 18, is eligible to trade in cryptocurrencies based on that Supreme Court judgment. Of course, it comes with its own caveats with a higher risk than normal. This is an asset class which is still evolving, but I still feel that any person above the age of 18 with reasonable research should be able to invest in digital assets.
Right. So say I'm a beginner. What do I need to go ahead with my investment in cryptocurrency? Obviously, I would assume that I would need to do some amount of study, research, and what else would I need?
Well, as I mentioned, that it's an evolving asset class, and it is unregulated currently, or I would say it is semi-regulated, not just in India, across the world. The governments across the world are looking at this asset class differently, whether they should apply the current regulatory frameworks or create different regulatory frameworks. So from that perspective, yes, it's got a longer than usual learning curve. However, as a beginner, what you've got to do is that, first of all, understand that you are entering into an asset class which is not yet regulated, so it has its risk associated with it. That's one. Second, you should be agreeing to this fact that you should be open to 100% capital loss in this asset class. And third, you should, first of all, look at maybe getting into research and understanding how these things work. This is a new asset class, no books available currently. Whatever books are there that are just about 6 to 8 years old. And it's evolving at such a pace. It is disrupting banking, finance, real estate, asset tokenization, cross-border trade. So there's a hell lot of legislative literature which is being written these days. So from that perspective, do your own research and then enter into this asset class.
Right. It almost sounds to me, Varun, like, you're trying to warn people and say that, are you saying adopt a wait and watch approach?
I would say that approach is still not wrong, because this is a technology of the future. So even if you want to invest today, you've not lost anything. Yes, of course, 5 years ago, maybe a digital asset would have costed you $1, $5, which is now looking at, let's say, Ethereum. 5 years ago, $1, today, $3,000. So yes, you've not missed the train, because this is a long-term thing that is happening. And countries around the world are actually analyzing this thing, how to regulate it. So I still feel that even though, yes, it comes with a caveat, it comes with a certain warning, and those warnings are now being sort of formalized as well. Just like you invest in mutual funds, you've got to say that mutual funds are subject to risks associated with it. Similarly, I would say this has higher than usual risk. And I would like to point out one more thing. Reserve Bank of India has been very proactive since 2013, disclosing that this is a higher than risk digital asset class. So you've got to be more than standard. You've got to be sort of precautioned by all these developments that are ongoing in the world, and thereby take care before you invest. So I would like to caution, but yes, this is an exciting asset class. It can make you wealth, but it also comes with its own caveats.
Right. So there are opportunities, but there are very high risks as well.
Yes.
So Varun, what would I need as a novice investor to invest? What do I need to be armed with? We said knowledge, but if you could tell us, would I need to go through an exchange? Because a lot of people don't know. Everyone's very excited. It's the new asset class on the block, but I literally have no idea. How do I go? How do I take that next step?
Correct. I think the first step that is to be taken, generally we find these new projects coming up with assurance of returns, 20%, 40%, those kind of crazy returns. Well, that is, I would say, a high risk asset class. It's always better to first of all go to a more regulated or semi-regulated or at least self-regulated exchanges, understand what their terms are on offer, understand new projects, understand how the value of a certain token is derived. Like Ethereum, it derives its value from the platform that allows other apps to develop their own what is called as dApps, decentralized apps on their platform. Similarly, Bitcoin has a white paper which is there for everyone to read. It's publicly available. So any new project coming into the market, of course, it comes with its own promises, but it also comes with its own risks. So it's generally better to first of all understand the project, understand what is it trying to build. Is it trying to solve a problem? Think of it like a new startup, and that startup, whether it's solving a tangible problem in the world, and then of course you should be good enough to invest.
Right. So there are a lot of cryptocurrencies that are also being developed in India as well, right? Would you say to someone who's just beginning to invest that we look at the ones that are already established, or do we dip our toes into the great unknown?
So I would say, well, India is very uniquely positioned. When I look at the global developments in this ecosystem, I'm very excited about the things that are happening in Hyderabad and Bangalore and Gurgaon and Mumbai, and even in tier 2 and tier 3 towns. India has one of the biggest resource pool of tech developers, and thereby understanding, let's say, technical languages like Solidity is something that comes naturally to us, and thereby we would be able to build blockchain and crypto products of the future. So this is like resetting everything. This is the new internet, and this is a new opportunity for India to build products which it could not build earlier during the internet era. So I'm very excited about the developments that are ongoing, and I look at the projects, Indian people going abroad, listing their projects. So I surely feel that just like what Freshworks did, and it has motivated the entire startup ecosystem by getting it listed in NASDAQ. Similarly, crypto projects or blockchain projects from India will surely get opportunities for global listings as well.
But before I kind of go into it, you would say that I should do my research, read up on it. How do I get a guide, a hand holder, someone who can take us on through the journey? So the exchanges are, yes, one medium. Is there any other avenue?
There are lots of I would say it's still an evolving space. Legislative literature is still work in progress, but we do have references. It's not a completely unknown field, especially in the last 5 years. We see, let's say, HMRC in UK, which is like the income tax equivalent of the Indian taxation authorities. They have come up with publicly available guidelines on how to pay taxes on digital assets, whether mining of digital assets is a taxable event or not. So those things are publicly available. India can actually borrow those legislative regulatory frameworks from those countries. Even Wyoming, for that matter, in US, has come up with 13 blockchain laws, and those are forward-looking laws. It is available on the governor's website in Wyoming. So India, of course, can borrow those laws. And in case you're a new player in the market, in case you want to invest, maybe as a student, maybe as an entrepreneur, maybe as an institutional level person who wants to come in and experience this space, I think those laws can provide an overall guiding light before you step in and start investing.
So I have a very specific question, and that has to do with banks. Varun, can you tell us if I can link my bank account to the exchange? So say, for instance, if I buy, sell, then can the money, and I'm really confused about it, is if I sell on the exchange, will that money make it to my bank account?
Okay, so currently in the Indian ecosystem, first of all, as I mentioned earlier, the Supreme Court judgment of March 4th, 2020 makes it very clear that you can actually go forward and trade cryptos, and not just crypto to crypto, but also crypto to fiat. So that on-ramping and off-ramping from crypto to the fiat world is legally possible in India. That's one. There are some countries in the world that actually restrict it, but most countries now opening up their banking systems. However, there's also a tension which needs to be looked into. May 31st, 2021, RBI came up with a notification stating that standard level and higher than standard level KYC needs to be implemented in case you're running a crypto project. So banking access, yes, is legally available, powered by the Supreme Court judgment of March 4th, also powered by the notification mentioned by RBI on May 31st. However, when we look at the individual traders, they generally struggle. Why? Because there is some anonymity attached to it. That anonymity is pertaining to any random person putting value in your bank, you not doing KYC, and you selling off those coins, and later on getting a notice from the tax department that this was a person who was sort of red listed or blacklisted. So those risks are always there. So what we generally suggest our clients is that while P2P trade, that is person-to-person trade, is possible, but do it only with KYCs, and obviously try to get into a simple standard contract of selling digital assets, pay your taxes on it. And that's the mechanism that you've got to follow till the time the legislative literature evolves in India.
Right. So, when I own a piece of property or when I own gold, I can always will it over to my heirs. Can I do that now with cryptocurrency?
Well, apparently there is no law currently in India to deny or restrict a will-based transfer from a person to its legal heirs for digital assets. It can surely be done. However, the nomenclature of those transactions, as we say in the blockchain world, that whoever owns the private key owns the digital assets. So the law has to upgrade itself that any person who maybe snatches away your private key is also then indirectly the owner of your digital assets. So that transition from, let's say, a father to son can happen only if the private key is given by the father to the son and then is captured in a legal agreement. So legally speaking, it's possible, but yes, the legal nuances of how to do it is still not possible, or it's still not available in the current Indian law, but going forward, it surely should be possible.
Right. For a small investor, what would you suggest, of all the asset classes that we have? Property, we have gold, we have investing in stocks and so on. So what percentage of my pie would you suggest? Also considering you said that, be willing to lose 100% of it.
Correct.
Would you suggest to anyone, a small investor, to invest in cryptocurrencies?
I think it depends on how much heavy is your research. However, despite your research, I would generally not suggest putting in 50% or 100%. There have been crazy stories that I've heard, that person selling his own home to buy cryptos and then losing everything during the 2018 crash that came in. We've seen similar crashes happening in 2021 as well, with Bitcoin rising up to $63,000 and then falling to $28,000. So those crazy wild swings in this ecosystem are possible. I would still say that in your portfolio, not more than 5 to 10% should be given to cryptos. If you're doing more than that, well, you're doing it at your own risk. There are people who are doing it and winning it, but there are more people doing it and losing it. So roughly around 10% of your portfolio. And it's not just to individual investors, even institutions, if they put in 10%, well, it opens up different asset classes for them as well.
So no more than 5 to 10%. I think that is a good advice, right? And you mentioned these wild swings. So how can someone then prepare for volatility? What are the signs? What does one look out for? Considering that I might well be a lone kind of a ranger, because may not be that everyone within my friends or family circle would be investing in crypto, and it's very possible that I don't have someone who's holding my hand, and I may not be as knowledgeable about it. So how do we take in the volatility that exists in crypto?
The volatility primarily exists currently in the ecosystem because the community is very small. One tweet by Elon Musk that he's accepting Bitcoins against Tesla cars just shoots up the Bitcoin. And one tweet again from Elon Musk saying that, okay, we are not going forward with accepting Bitcoins because there's some issue regarding environmental concerns and the cost of mining 2 Bitcoins, it brings the entire market down. So it primarily happens because the number of people trading currently, not only in India, in the world, are pretty less as compared to capital markets. And from that perspective, yes, wild swings, as long as the community is less, the number of traders are less, the volumes are less, this will happen. So you should enter this market with the presumption that your entire 100% of capital can be eroded. If you're willing to take that risk, only step into this ecosystem.
Right. And so Varun, one of my, among the last questions is, what are the myths that you see associated with investing in cryptocurrencies that you would like to bust for us?
Well, two of the major myths that I look around is that people feel that, oh, cryptos, that's illegal. So I want to sort of bust that myth here in this forum. Cryptos were never illegal in India. Yes, there was a ring fencing notification by the Reserve Bank of India, and that was a very rightful move at that time. People were investing and they were earning 60, 70, even 400% returns, and then also losing it in a matter of hours and minutes. So it is an industry which is highly unregulated. That's the first myth, that it is not illegal, but you are entering it at your own risk. That's one. And second, people consider that, okay, cryptos are, because it has anonymity attached to it, or semi-anonymity, I would say, this can be used as a mechanism for money laundering. I still feel that when we look at, as I mentioned, 2 laws in UK as well as in Wyoming, even Singapore, for that matter, has come up with digital token offering guidelines. It very clearly upgrades the anti-money laundering policies and the anti-money laundering compliances which needs to be done. In Europe, GDPR for that matter, which is the data protection law, which is yet to be implemented, a corresponding law is yet to be implemented in India. So all these laws are actually getting upgraded in the world. India needs to sort of pick up pace in upgrading their corresponding laws to cover the risks associated with money laundering. But apparently this thing can be used to build the future fintech companies of the world, cross-border trades, real estate, share tokenization, asset tokenizations, lots of things that can be done using crypto. So there's an upside to it. And yes, it comes with some risky caveats as well.
So there is a future. And of course, as you pointed out, this ecosystem is only going to open up. More and more people are going to be part of it. And of course, it's going to, this ABC that we're talking about, investing in crypto, maybe we might not have to do it very, very soon in the next couple of years. So for an investor like me, in the meantime, what do I do? A small investor who's interested in this space.
I would say, if you're interested in this, first of all, do your own research and understand, don't get into the new tokens which come and then just vanish in a matter of days. So try to first enter into Bitcoin, try to enter into sort of more stable assets like Ethereum, which are known, which are 5-6 years old, run by a community, who's running it, that there's some person running it. So, and you have answers in case a transaction gets stuck, where to go to. So that's the first thing. The second thing is that the 5 to 10% rule. The total investment, not more than 10%, should be invested in these asset classes.
Varun, if you could shed light on whether digital assets are taxed.
Yes, of course. So this is a wrong notion that digital assets, well, it's all on the blockchain, all on the explorers and not taxed. It creates value, and thereby any value that increases from A to B, whether it is sort of liquidated in fiat or not, that's a debatable question, when to tax it. But the question about whether it should be taxed or not, governments around the world have been able to clarify. One of the foremost governments doing it is UK. The HMRC clearly mentions about the protocols to be followed for taxation of digital assets. Even in India, we made our efforts. We wrote right to information applications as early as 2018 and 19 to the income tax department, to the GST department, to validate and check if they have some guidelines available. What we look at here is that there have been some notices issued by the tax officers which ask you about the transaction history, keeping trails of the transactions that you've done. And they also claim to collect capital gains tax on the investments that you've made. So it's surely taxable in India, just that the clearer guidelines are not there. But I would highly suggest that if you're a regular trader, try to tax it and create a balance sheet, create a profit and loss account, show it as your business income. If you're an occasional trader waiting for making long-term gains, it has to then be categorized as capital gains income. And in case you are just investing and just forgetting, or maybe it's a small thing for you, then it should be taxed as other sources income. But there is a guideline or reasonable guideline available, and the current income tax forms are good enough to capture all these details. From that perspective, yes, it is surely taxable. How to tax it will surely evolve in times to come.
So it is, what is the value of tax that's attached to, say, for instance, an NFT?
Okay, so it depends on, as I categorize in three categories. Business income, the standard business rates, let's say 30%, 25% for corporates. It depends on long-term, short-term capital gain, 10% or 20% with indexation, without indexation benefits. And third, if it's other sources of income, then it's standard 30%. So that's how it has to be categorized. So it depends on what is the volume, what you're doing. Specifically, you came up with the concept of NFTs. Yes, currently NFT is like an investment. So it should be construed as a capital investment. And when you sell it off, then the capital gains should be accrued. Accordingly, 10 or 20% based on indexation benefits should be paid to the government.
Varun Sethi, this has been very, very insightful. Thank you so much for giving us so much information on how should a small investor, what are the investment guidelines that one should look at before investing into an asset class like cryptocurrencies. Thank you very much for your time, and we wish you all the very best.
Thank you so much. It was very nice. Thank you.